Welcome to Real Estate is Taxing, where we talk about all things real estate tax and break down complex concepts into understandable, entertaining tax topics. My name is Natalie Kolodij. I'm your host, and I am so excited that you've decided to join me. Issuing 1099s are a crucial step for the majority of business owners, and unfortunately, there are some commonly made mistakes regarding who needs to issue these. I'm going to walk you guys through 3 mistakes people make when it comes to issuing 1099s. The first mistake that I often see when someone is issuing a 1099 involves a business where parents are employing their children who are under 18 to work in their business. While employing your children is a fantastic tax strategy and can allow you to pay your minor child without incurring payroll taxes and effectively shift income from your higher adult bracket to their 0% tax rate, it has to be done correctly. Check out episode 17 if you're looking for more information on this strategy. When someone is employing their children, it needs to be treated as though they are employing their children. And the IRS has very specific requirements about who qualifies to be a 1099 independent contractor versus who needs to be issued a W-2 and treated as an employee. One of the key differences between the two classifications is if someone has control over only the outcome of something versus if they are being controlled with the entire process to get to that outcome as well. When it comes to a minor child who is working in someone's business, it is very unlikely that they have absolute free rein to accomplish broad tasks with no additional guidance or oversight from their parents. Because of this, it is incredibly unlikely that someone who is employing their children could issue them a 1099 and have that be correct for the work they are doing. Additionally, one of the key benefits to paying someone's children to work for their business is the fact that the child is able to earn up to the standard deduction and not have to file a tax return. The standard deduction is $14,600. However, if someone has any more than $400 of self-employment income, they are required to file a tax return. So the first huge mistake I see with businesses issuing 1099 is when a business issues their child or children 1099s for work they completed for the business that should have been paid as a W-2 employee. The second mistake I see when it comes to issuing 1099s is for landlords to believe they have no requirement to issue a 1099 to anyone who did more than $600 of work for their properties. This used to be the case if someone was indeed not in the trade or business of operating a rental, but the majority of rental properties do rise to the level of being a trade or business, which is broadly defined as a continuous, ongoing, regular involvement for a profit motive. So unless someone has really just inherited a property, they've never visited it, they've never raised rents, they ignore it. If you are someone who intentionally bought real estate to lease to others with the intention of making money from that, especially if it's more than one property, there is a very good chance it rises to the level of a trade or business, and you should also be issuing 1099s at the end of the year. This became a more prominent matter when the 199A QBI deduction was released a few years ago. There was a lot of controversy on whether or not rentals qualified, and based on the defining code, a rental that rises to the level of a trade or business will absolutely qualify. However, because a lot of people were uncomfortable with having to interpret that level, the IRS did also release a safe harbor related to rentals and the QBI deduction. I personally ignore that safe harbor and just go off of the actual code provision of activities rising to a trade or business. What the QBI deduction is it allows a business to have a 20% deduction on any net income after all other expenses. So if your rental activity rises to the level of a trade or business, you are involved for a profit motive, then there is a good chance that you are a trade or business and that you qualify for the QBI deduction. And to further enforce that and make sure you are not misclassified, that you should be issuing 1099s to anyone you pay more than $600 to in the course of your business. I will add as a caveat that corporations do not need to be issued 1099s. So if you know that a contractor or someone who has done work for you is definitely structured as a C or an S corporation, they will likely not need to be sent a 1099. The final mistake I see when it comes to a business issuing a 1099 is when a business chooses to issue a 1099 to an owner shareholder who should have received wages. The premise here being that if someone is an S or a C Corp, part of the requirement is that they take a reasonable payroll. What we often see is an S Corp shareholder who did not take any W-2 wages during the year as legally required. Because that is part of the legal requirement, that shareholder would be paying normal payroll taxes on the amount of that reasonable payroll. So there are tax professionals, bookkeepers, people preparing their own taxes who will think, well, because I didn't do that, the next best thing would be issuing myself a 1099 so that I'm still paying some type of payroll tax on some amount of the income. I'll be paying self-employment tax, both halves of it on that full 1099. Unfortunately, this is still incorrect, and two wrongs don't right the tax situation. So while the intention for still having to pay some type of applicable tax is a good mindset, it unfortunately isn't the correct way to fix this problem. In this situation, there has been lots of guidance that a salary cannot be distributions or a salary cannot be paid as a 1099 when it comes to this. We do have a tax court summary opinion, 2013-62, where this was really reiterated. So if you are a shareholder or if you are working with a client who is a shareholder and maybe they have an S corporation, they are in a position where they should be taking a reasonable amount of salary and that didn't happen during the year, you now have to make the choice to do an after-the-fact payroll and have some penalties on doing those reports late, or to correct the matter going forward. But doing an additional thing incorrectly because a W-2 wasn't issued and instead issuing a 1099, that is not a valid fix for a shareholder not having taken an appropriate, reasonable amount of a required W-2 payroll. This creates, in addition to just being an additional incorrect action, it opens up several liabilities for that shareholder. At the starting point, if this is reclassified to W-2 income, if ever looked at by the IRS, then not only will it be switched over to the correct form, but there will be penalties, interest, etc., that relate to that having not been filed and done correctly back when it should have been. So in issuing a 1099 when there should have been a W-2, you are not fixing the problem, you are creating a second inaccuracy and leaving something open to incur penalties down the road. The next issue with this is it is not an allowable payment for what it was made for. You are not allowed to pay a wage on a 1099. So then the next question becomes, is that amount paid on 1099 actually a deductible expense to that corporation because it was improperly used? It was not an actual valid payment. So can that corporation actually take a deduction for giving the shareholder a 1099 when what it was a payment for was wages, and wages cannot be paid as a 1099? The intention is to try to correct the tax owed, but in doing so, you are opening up a lot of risk for the taxpayer by now having multiple errors on that tax return instead of just one. I'm sure there are countless other common mistakes that come up with 1099s, but these are the top 3 that I run into, and I wanted to make you aware of. If you are currently paying a child on payroll, but issuing them a 1099 instead, or if you are currently someone who owns rental real estate, but you are not sending 1099s to those who do more than $600 of services or work for you, or if you are an S corporation shareholder who is not taking a W-2 and you or your accountant has issued you a 1099 instead, any of these actions are incorrect, and you should look at the best way to correct them and discuss this with your tax professional, looking at the potential risks and benefits and the most reasonable way to get in compliance. As always, I hope that this episode added some value, and if you know someone who might be having one of these 1099 issues, please feel free to share this episode with them, and I will talk with you guys next week.